Welcome to the daily update, where I'll go over the action in the market for Friday, May 10th, and then we'll see how things look for Monday, May 13th. We had a slight up day. We opened up looking a lot better, but then we gave a lot of those gains back. We pretty much chopped along the unchanged level, but we saw a little bit of strength going into the end of the session. We're not seeing a lot of selling into strength right now, and that can be taken as positive. Now, in the upcoming week, we're going to get some heavy duty inflation reports. We're going to get PPI, CPI, retail sales. And this is where the whole mess that we were dealing with, at least up until a few weeks ago, concerning inflation, that's when the Goldilocks scenario started to go away and is now being replaced by this let's hope inflation doesn't get too bad scenario. So we'll get another check on that in the upcoming week. I am having some problems right now with Rumble. They changed their interface. If you go to Rumble, you'll notice, at least for me, it looks different just when I go on a regular account. And they must have done some things on the back end as well. It took me forever to upload the video for Friday. And then it took forever to get those videos to play. So unless you're just totally opposed to going to YouTube, if you can't get the videos to play right on Rumble, please jump over to YouTube. And the same goes true. If I'm having trouble with YouTube, you can always jump over to Rumble. That's why I put the videos in two different places. It serves as sort of a backup. All right, let's go back and talk about what happened, and then we'll go through some charts. Right at the open, we had a higher open. We got up above R1 at 52.26, and then we hit resistance right at R2 at 52.38. Actually, we ticked a little bit above that. And then we fell back down below R1. We got back down to the unchanged level, which acts as a support level on an up day. And we just chopped along the unchanged level for a lot of the session. We rose to close slightly below R1. So that's where we got the gain from. We were up 0.16%, and we're still seeing volume dropping off. And that's been kind of a thing that we've been watching all week. We've been going up higher on lower and lower volume, and that quite often is a warning sign. But that could change. We've got some more catalysts that could really drive the market in the upcoming week, and folks will probably be coming back in. We are positive in the short, intermediate, and long term. We are looking overextended to the upside in the short, and even our intermediate term list is getting a little longer. Momentum or due for a pullback? That's what we're kind of weighing back and forth. So far, it's suggesting that momentum has been really holding up pretty well. This week, hopefully it'll get a little clearer between inflation and interest rates as we get more inflation data. Earnings are going to start to kind of slow down now. This was kind of the big week for those. Last week and this week were the two real big weeks for earnings, and those will start to taper off. There'll still be some, but not as much as what we've been seeing. And then we want to keep an eye on all the different geopolitical things. Some comments. It was a mixed day in small caps. They ended up underperforming. They're just in a range that they've been in for pretty much all of 2024. They're just bouncing around kind of like bumper cars inside that range. The VIX is below 13, and it's still having a tendency to drop near the end of the day. Now, when we close higher, going in at the latter part of the session, that's to stand to reason. But still, during the early part of the days, we're tending to see the VIX positive, and then it's starting to turn negative later in the day. The S&P closed up 1.9% for the week, and I'll be going over the weekly charts in the weekly video. Volume does continue to drop. On a short-term basis, we just have one more addition here. The slope oscillator is starting to get extreme positive. The other ones, the Stochc RSI, the Williams percent R, the CCI 14 and 20, and the stochastics, they've been on this list now for the last number of days. Intermediate term, we have the ultimate oscillator. That's a new addition. The CMB composite, which is, I believe, the fourth day now that it's extreme. The VIX, as we measure it using the RSI based on 9 periods, that's dropping down a little bit more as the VIX continues to fall. Again, just suggesting that maybe it's falling a little too far, too fast. The S&P McClellan oscillator and the Sean trend meter. Long term, seems like for all of 2024, I've had this on the list. we're a little extreme, in fact, quite extreme, with our 150 and 200 period simple moving averages. Then the scenario, the hope is that in the upcoming week, we'll be able to modify this scenario a little bit. But right now, it's this higher for longer that the Fed's going to do, where they had been anticipating rate cuts. No, that's pretty much gone right now. If there are going to be rate cuts, and still there's a lot of folks out there that are anticipating rate cuts, we're going to have to switch back to that scenario for that to happen. What's been giving support to the market lately is this decreasing of quantitative tightening, and that's adding some fuel to the market right now. We were up with the dollar and we were up with interest rates. We closed at 4.5%, where we had been at 4.45% with the 10-year yield after Thursday. The yield curves are still inverted. Sentiment is now up a little bit. We're back into the neutral area where we had been negative at 44. We're still not trending. The ADX is trying to figure out, okay, are we trending or are we not trending? But with this rather slow action, it's having a difficult time kicking into gear. It is positive, though, because the green line is still on top, but we're below 20. We are still positive with the bias since we had another up day, even though it was a small up day. And over the last number of days, we've been positive, so our momentum is still looking pretty good. The economic reports, the only one that came out, and this was kind of disappointing, was consumer sentiment. They expected it to come in at 76.5. It was at 77.2 last time. It dropped down to 76.4, and that's a little bit of a concern. When you go back a year ago, it is an improvement where we had been at 59. So year over year, we're looking okay, but month over month, people are getting a little more less optimistic or more pessimistic. And then there's the Treasury budget, which I don't have a chart for this one. It came in with a surplus of $209.5 billion compared to $176.2 billion if you go back and look a year ago. So here's some charts. This is looking at consumer sentiment, and I also plot the 2-year Treasury yield on here. As rates have been going up, we are seeing folks not being as optimistic about things. And this had been showing some improvement, and now to see it drop back down is a little bit discouraging. Here's another breakout chart where we look at the blue line, that's the total. And then we have how people are feeling right now. That's the purple line. And looking out into the future, that's the yellow line. And they're showing a decrease across the board there. And then looking at this from Isabel Net, this just shows this gray area. That's the top 1%. And they own most of the stock. And this is what we try to follow. Now, doesn't necessarily mean that the big money is necessarily the smart money, but we still want to try to figure out what they're doing anyway. And then if you're in the 90 to 99% range as far as wealth, that's the red area. 50 to 90%, that's green. And then individual investors, which includes all of us, we're in the bottom 50%. Buybacks. We're getting a lot of buyback information lately, and some of it seems to be a little bit contradicting each other, where we do have actual figures here that are in dark blue, and that's what's already happened. The lighter blue areas, these are forecasts, since we don't get a lot of that information. And this is interesting to follow, but a lot of people really pay attention to this, but there can be a real lag from the time these things are announced until they actually happen, until it's actually reported. By the time we get that information, it's like that's way, way old news, but we still want to keep track of this anyway. Then looking at core inflation, because we're going to be getting CPI in the upcoming week, this breaks down the other areas that make up core inflation. Of course, they take out food and energy, the things that you have to have. And these other things are important too. It just kind of breaks them down into their different categories. And then this blue line is what they come up with the core rate on a month-over-month basis for right now. Looking at some charts, Jason Gefford had kind of an interesting positive chart here. It says a bullish NYSE advanced decline line ratio scenario. He says for only the 14th time since 1933, the NYSE advanced decline ratio exceeded a threshold of 3-to-1 for 3 consecutive trading days, with the S&P 500 above its 200-day moving average. Now, the S&P 500 didn't exist in 1933. It came in, I think it was in the 50s. That's when it started. But they go back and they use historical data to say this is what it would have been. But taken all together, we're seeing positive action. And this is more in a broad market sense. We might be seeing some lagging with the Magnificent Seven and the large cap stocks and the stocks that have really been driving things higher. But to see broad market participation, and that's why we follow the NYSE, this is showing some improvement. And this would probably be more short term. Then this is the U.S. Economic Surprise Index. I showed this a couple of days ago, but this is plotting more information on here. And it was kind of hard to figure this out because there's really no key to this. So I have to assume that the black line is the Economic Surprise Index, as lately the reports have been coming in weaker than expected. Now with PPI, CPI, retail sales, this thing could turn and go up very easily if it comes in stronger than expected. But on here, we have the dollar and we have something else that I can't remember right now because there's the 10-year yield and the dollar. I think the dollar's on here too. The takeaway from this is, since this is really dropping, these coming down would be more positive for the market. You can see there was a pretty strong correlated relationship between the two. So the fact that we're seeing a bit of a decline with the 10-year yield, especially, that could really continue to give support to stocks. And then here's our cycles chart. I don't know where we're at in here. I don't know if I'm going to keep using this chart for very much longer. I'm going to wait and see if we get an updated version of this. Here's our intraday chart where we kind of put in the high for the day right at the open. We opened at R1, went up to R2. We hit resistance there. We fell back down below R1, came back down to the unchanged level, just danced along here for most of the session, and then saw a little bit of a tick up going into the close, giving us a positive day. Here's our intraday chart. Again, nothing too spectacular really happening there. We are seeing where growth continues to outperform value intraday, and that's maintaining things a little bit more positive. We're not seeing that on the end of day charts, but we're seeing it intraday. With the growth to value ratio for the S&P, it was actually down, but it's not really showing an awful lot of weakness. Our end of day charts, growth was up, but up quite a bit less than value for the large caps. It was down for the mid caps and down more for the small caps. So here's our end of day charts, rolling back over a little bit with the small caps and just not showing a lot of strength currently. We turned back up, but we've been seeing some weakness with the mid caps, and we're coming back down to the 200-day moving average with the S&P growth to value. Coming back down a little bit further into the rainbow with this other measure of growth versus value, and not seeing an awful lot of strength right now when we compare discretionary to staples. Coming back down, but still above its 200-day moving average with this ratio. Large cap growth was up slightly, and we're still above all of these moving averages, so that's holding up for now. The Wilshire was up also and above its 50-day moving average. Looking at our trend, we're still below 20 with the ADX. We're below the moving average, so we're not trending currently. However, we still default to positive because the green line is on top and also advancing. We're trying to turn up a little bit in the short term, and this usually kicks into gear a little bit quicker, hence it's a short-term chart. But we need to turn up, go above the moving average, and go back above 20 to establish a new trend. Volume just continues to drop off, and that's a concern. We've been going up here as volume has been dropping off. I mean, that's classic technical analysis. Warning sign 101 is that an increase in price with a decrease in volume is usually a concern. Looking at sentiment, where this is the love measure here, this looks globally at sentiment, where we had become quite extreme positive. We fell back as stocks were under pressure. We're starting to come back up now, and we're not necessarily getting an extreme reading, at least yet. Looking at the ulcer index, it's continuing to decline below its moving average as fear is dropping off. The latest reading with Investors Intelligence, which came out on the 7th, that's more neutral. And we're continuing to fall with the VIX, both with the line chart and the bar chart. And the volatility of the VIX, we're getting very low readings here. This just means that the volatility of the VIX itself is really slowing down. And this could end up being negative, but until we see some follow through with declining prices, we tend to lean more towards the positive side with this. The momentum of the VIX continues to be down. And then here's an intraday chart. I tried to use these green and red where it's positive, it's green. When it drops negative, just showing how we've been seeing a lot more of the weakness over the last few days with the VIX near the end of the trading session, where it stays positive at the beginning and then we close negative, positive, close negative. This is the one that I really picked out, was Thursday's session, where we were positive, and then with about 2 hours to go, that's when we came down and actually turned negative. And the same thing happened on Friday. We were positive for a lot of the session with the VIX, and then it really trailed off going into the close. Here is the speed of the VIX, which is starting to drop down a little bit further. It's below 30 now, suggesting that it's come down pretty far, pretty fast. And I want to keep an eye on this. We're getting down into this 13 and below area now. We're below 13 with the VIX. And this is when we tend to see the best returns. As we go higher with the VIX, they're still positive with these returns until we get above 20. Then that's when the returns start to turn negative. The equity put call ratio ticked up a little bit, maybe a little bit of hedging ahead of the weekend, but we're still declining with our 5 period. And this volatility risk premium indicator, it's turning a little bit, but it's still giving us a very low reading, showing that there's just not a lot of volatility currently. We ticked up with this fear gauge, but we're continuing to go down with this other fear gauge. Advanced decline line looking better and coming back to previous highs. And this could end up being positive, where we're barely starting to break out and make a new high based on price, where we haven't got there yet based on the actual price itself. But we are lagging a little bit with volume, and that could be the below average volume that we've been seeing causing that. We're still looking good here with the new highs versus the new lows. With the open that we saw that was higher, that generated an awful lot of new highs. We're going up with the 5 period and the 10 period. We're positive with the advanced decline ratio. We actually flattened out to slightly decline with accumulation distribution, but we're still above the moving average. So that's still positive. We're still just barely positive here with the Chaikin money flow. The Chaikin oscillator is still looking positive. In our cumulative NYSE advanced decline line, it ticked down a little bit here. But when we look at our regular advanced decline line, it's continuing to show some more strength. And our other NYSE advanced decline line is also holding up for right now. We're seeing more broad market strength right now. When we look at common stock based on price, we're actually going out and breaking out above this previous high, both based on price and volume. New highs minus the new lows for the NYSE continue to be positive. And the cumulative measurements for the S&P based on price, we're coming back to this previous high, maybe even a little bit above that. We're lagging a little bit right now when we look at this based on volume. Our advanced decline line studies, not real improvements here, but we are still positive. With the NYSE common stock, we were up with the S&P. We were flat with the mid caps and actually declined a bit with the small caps. Here's our daily chart where we were able to get above and close above this pivot level. This had been acting as overhead resistance. So we did break through another resistance level for the S&P, but you can see on the bottom where we're just trailing off more and more below average with volume as each day unfolded this past week. The Stochk RSI is still extreme positive, as is the Williams percent R, the CCI 14, and the CCI 20. We're watching the 20 period moving averages. The longer we stay above this, the more this chart improves. In our 20 period double and triple exponential moving average study, continuing to go up. So this is also showing improvement in the short term. We declined, or actually advanced with the 20 period, 50 period, and we're pretty much flat with the 200 period moving average study. The force index came down just a little bit, but is still positive. We're extreme positive in the short term with the stochastics, intermediate short term with the stochastics, and we're still positive with the long short term stochastics. And we're still in the +2 channel. When we start to get nervous here is if we bolt up into the +3 channel. Based on standard deviations, that means that we're getting overextended. We're not there yet. Intermediate term, the balance of power, even though it ticked down, is still positive. And we're getting some brown bars here. And you can see other times when we had brown bars, it didn't, sometimes it led to more advances after that, but sometimes it meant to a little bit of a decline and then some sideways action. So this is definitely not turning back positive yet. It's picking up something that it doesn't like to turn back over to blue. The highest high value chart still hanging in there for right now, and we're above the midpoint. The TTM squeeze is showing that momentum with this indicator is positive. We're getting above the 50-period double and triple exponential moving averages, and they're starting to turn back up. CMB composite, even though it was flat, is still extreme positive. The 50-period moving averages, we want to keep an eye on those. If we see a decline, will one of these moving averages act as support? The ease of movement continues to be positive, and the Erin finally said, what? Something's going on. All right, it actually had been negative. It jetted up and is now looking positive as the green line's going up and the red line is now finally coming down. The S&P McClellan oscillator ticked down, but it's still extreme positive. So we're still going up with the summation index based on price and volume. The NYSE McClellan oscillator also ticked down, but it's still above zero. So the summation index for the NYSE, we're going up based on price and volume. We're rolling over a bit here. Just want to be a little concerned about this. This has been a fairly good indicator lately. Sometimes it's not, but we started to turn up before price started to turn up. Now we're starting to roll over, both based on price and volume. We'll be watching this to see if there's more follow through with this Swenlin trading oscillator. But momentum, we're pretty much positive across the board now. The PMO and also the PMO based on price and volume are positive. We're flat, just under being extreme positive with the PMOs that are rising. The buy signals are going up, and we're starting to turn up more with the PMOs above zero. The Swenlin trading gee whiz. The Elder's Impulse system is still positive for the S&P. Parabolic SAR is positive. The slope, we're getting above this green line. Now, I put the green line on here. This is just what I use as a guideline to suggest that maybe we're getting extreme, but we are positive with the slope oscillator, and this is our touchiest oscillator. The MACD is above zero and advancing, so that's turning positive. So in the short and intermediate and even the long term, we're now positive with our oscillators. And we're still above all the moving averages here. We want to see the 20s cross back above the 50s. That would make things look more positive yet. Bullish percent index continues to advance. That's hanging in there for right now. And the bullish percent index for the NYSE is also advancing and above 50. That's positive. We're just kind of dangling around under 50 right now with the NASDAQ 100 bullish percent index. We're not seeing the strength and the leadership from this index that we usually see. And that would really help things if this could really get into gear and the whole NASDAQ 100 could show a little bit more conviction, especially to the upside. The money flow, it was flat, but it's still above 50. The ultimate oscillator starting to get extreme positive. The vortex is positive. The RSI 14 and 9 are positive. We're getting just a little bit underneath this extreme positive reading with the short term. That's the one based on 9 periods. On balance volume is still above the moving average, and now the moving average is starting to turn up. That's positive. The stocks above their 20-period moving averages, we continue to go up. We're above 70, but it hasn't really generated any kind of a breakout thrust, at least yet, based on this next chart. That's what we're waiting to see. When we had a really extreme reading, and then not long after that had a reading above 70, that led to good momentum. There was a failure here, but it never got up to 70. However, it did produce a positive divergence, which led to another thrust, and then you can see how the market acted after that. We're wondering what's going to happen here. We're above the 70 level, and so according to what has happened over the last year to year and a half, I guess this would be 2 years, I don't know, however long's on this chart, this should give some support in the short term to stocks, but we don't ever want to take anything for granted. With the stocks above their 50-period moving average, we are above 50 and continuing to go up. We're going up with the 100, and we're also going back up with the 200. So that's still showing a continuation of strength. The Copic curve is showing momentum by this indicator is positive. The Sean trend meter is up into this initial extreme positive area. We're breaking out above the Ichimoku cloud. That's positive. Standard deviation is still going up and just showing that we've been going up pretty fast lately. Pring bottom fisher did generate a buy signal back in late April, and so far that looks to be somewhat legitimate. The mass index continues to drop. So now this is a completed signal, and it tries to pick out a possible reversal. Since we've been going up, it would just stand to reason if the mass index is looking for a reversal, that would be down. Our different charts, we're still positive with the Heiken Ashi, the Kegi chart, the Renko chart, and the 3-line break chart. Long term, we're above this R1 level, and we were able to close above it now for 2 weeks. We closed above it last Friday, just barely, and we closed a little bit more above it this past week. So this is showing improvement in the long term. We're still looking extreme with our 150 and 200 period moving averages. And we're positive across the board with the Keller market model. We're still negative in the intermediate and long term with bonds based on price. We're negative with commodities and the dollar in the short term. No changes here with the decision point scorecard. Saw an awful lot of blue or green throughout the day, really right at the open. That's when all of this was triggered. And then later in the day, as the NASDAQ saw some weakness, it dropped under 16.3. Here's the daily sector chart where staples, they're still strong, and they were the best performing sector. Financial, they've been doing okay. Tech actually did all right as well. Healthcare, another defensive thing. Communication did all right, but you can see these percentages are really quite small. Where energy was down a bit, discretionary, still under pressure. And real estate, where it had been at number 1 yesterday, now it's back down here to getting spanked again. We're still hanging in there with the S&P to S&P equal weight index. They're both going in the same direction and not really diverging right now. We're seeing no change between the ratio between the S&P 500 and the equal weight S&P. The Dow had really pretty good days, up 0.32%. It closed well off of its high, but we broke above this R1 level, and we were able to hang on to that in Friday's session. The diamonds continue to be positive. The NASDAQ, it's really having a difficult time with this R1 level. We were above it, but then we closed down right about on this pivot point. The NASDAQ 100 has come right up to its pivot point. It had not been doing that. And so the fact that it came up is positive, but this is also acting as overhead resistance. We're still positive with the QQQs when looking at the Elders Impulse system. The NASDAQ 100 momentum is positive. We're above all the moving averages with the QQQs. Again, just like with the S&P, it would be more positive if the shorter term blue moving average could cross back above the red moving average. That's a 20 over a 50. Small caps came right up to this R1 level and then came down from that resistance area. We've switched from being positive over to neutral for the small caps when looking at the Elders Impulse system, coming down slightly when we look at the Russell 2000 small cap index. So we're declining with the RSI. We're still above the 50 period moving average. The longer term trend is still positive, and the momentum continues to be positive. The mid caps, they got above this R1 level, but then ended up closing down below it, but they're still above their 50-day moving average. We still are positive with the Elders Impulse system for the mid caps. Apple was down and still above both of these moving averages, but in a longer term downtrend. Tesla was down another over 2% again and is also in a downtrend. Nvidia was up, coming back up a little bit above its 50-day moving average. Microsoft just is having a difficult time breaking above its 50-day moving average. Meta was up barely, but still underneath its 50-day moving average. Amazon was actually down. It's like, okay, let's set an all-time high and then sell. That seems to be what happened there with Amazon. Google was also down. It had been trying to make a comeback after it spiked up, pulled back. Now it's starting to fall back a bit. And the FANG index was barely on, it was down fractionally, but it's been chopping sideways lately as we're seeing these big stocks underperforming lately. The financial sector was up, and we're in a solid uptrend and above the 50-day moving average. We're ticking back up just a little bit here with our staples to tech ratio. We want this to continue to go down. And it has been coming down, but we want to see it go down with more conviction. The dollar ended up being up. We're back into the 105 range right now, which could have pressured stocks from doing even better. When we look at the S&P and compare it with the rest of the world, short-term relationship is still getting stronger. The longer-term relationship is pretty much flat to slightly declining. And I wanted to break out the staple sector again. It was up over 0.5% and continues to be in a pretty solid uptrend. Utilities were actually down slightly, but they just been going up like crazy. These are some areas of concern that we want to be aware of. The total U.S. stock ETF, it was up slightly and above its 50-day moving average. We were up with the 10-year yield. We were down with the 10-year based on price. We are still declining when we look at bonds and compare them with stocks. This ratio is continuing to decline. That's more positive for stocks. We look at the S&P 1500 and compare it with shorter term bonds. This is continuing to come out of the rainbow. And another broad market measure with further out bonds. This is also going up outside of the rainbow. We're still looking okay here with a soft landing scenario for the time being. As this continues to come up further out of the rainbow here, the Qs, even though they've been underperforming, they're still coming up out of the rainbow when compared to 3 to 7 year bonds. And the Eurozone, they had a good day again in Europe. They're breaking up a little bit more out of this rainbow when we compare it to American bonds. And home construction coming right back up to the top side of the rainbow when compared to bonds. The tech sector also coming up to the top side of the rainbow when we look at 3 to 7 year bonds. And then looking at growth of value, not seeing an awful lot of strength here. The Qs to S&P coming down to the moving average, declining with discretionary to the S&P, declining back down to the moving average when large cap growth is compared with large cap value. So with the large caps coming down to the moving average, below the moving average with the mid caps, and below the moving average with the small caps. Still looking good here, though, with our 10-day average of the S&P 500 highs minus the lows. This is continuing to go up. We're still positive with our advanced decline ratio, both based on price and volume. We're still looking good from a broad market measure when we look at a 5-period moving average of the highs minus the lows. This is a concern. We're going down. The S&P is underperforming utilities. Now, utilities have really been doing well. The S&P has been doing, but we want to see this going up to turn more positive. We want the S&P to outperform utilities. And we're going back up here when we look at staples compared to the S&P. This had really spiked up. It was coming down. We want to see this decline more for it to turn more positive. So what's our outlook for Monday? I really haven't changed anything here because there really was not much that really changed. We're positive. We're above the 50-day simple moving average. And we have some extreme positive indicators. Is that negative and due for a pullback? Is that positive, showing good momentum? We're still lagging with the NASDAQ 100, and the mega caps are just not leading things higher right now. We're not going to have any economic reports on Monday. We want to keep an eye on all the different crazy things going on in case it does have an impact on the markets. Here's the upcoming economic calendar. Nothing on Monday. We're going to get PPI on Tuesday. This is crazy. We're going to get CPI and retail sales in Wednesday's session. Usually they're a different day for each other, but they're coming out on the same day this time. And we're going to get industrial production and capacity utilization on Thursday, and then the leading economic index will be coming out on Friday. Here's also another calendar chart, but nothing from Monday's session. And there's going to be some, Powell is going to be speaking on Tuesday, and then just the forecast and what the previous readings were for some of these reports. Seasonality, we're negative when we look at the Dow and S&P for Monday's session, May 13th. We're neutral to negative with the NASDAQ. But when you look at the election year, we're actually showing some positive seasonality with the green dashed line. We've come through what could have been a more difficult time for May, but we kind of bucked the trend there. Now we're coming back into a little bit more positive time for May before we see another weakness as we get more into the latter part of the month. Monday is the most positive day of the week, so we have that going for the market right now. According to Tom Bowley, we're still in that weak time, and that will last until the 25th. So our warning signs, the mass index signal has been triggered now. Since we were going up when this was triggered, this may suggest a reversal, but we're not seeing really much confirmation other than the NASDAQ 100 and the mega caps. They're lagging, but they're not falling apart. So we're not seeing it be confirmed, at least yet, with other charts that we look at. The bullish percent index, we're still below 50, and the NASDAQ 100 has been lagging the last couple of sessions. If the S&P makes a new all-time high and we still have staples and utilities just screaming to the upside, that will be a warning sign to us. They can still go up. Staples were going up and the market was going up. Utilities can go up. It depends on the context for why they're going up. And these are usually defensive areas. You don't get into these when the market's going up. You typically get into these when the market is going down to see them really doing well and then possibly hitting a new all-time high. If we even get there, that would be a concern. Positive signs, pretty long list. We still have the equity put call ratio based on 5 periods. That's going down. And then all of our positive things, oscillators, the Swenlin trading oscillator, even though it's rolling over a little bit, we want to keep an eye on that. The parabolic SAR, the bullish percent index for the S&P, the ultimate oscillator, which is now starting to look extreme, Chaikin money flow, the Chaikin oscillator, the money flow index, the vortex, the Copic curve, the momentum for the NASDAQ 100 and the financial sector. So our conclusion, I haven't changed this. We're still positive. We're above the 50-day simple moving average. We have some extreme readings. Not sure if that's a good thing or a bad thing. The NASDAQ 100 has just not been participating, nor have really the mega caps to any real extent. In the short term, we're positive, but we have a pretty long list of extreme positive indicators right now. Intermediate term, we're becoming more extreme as that list is starting to get a little bit longer. In the long term, we continue to be positive. We are above the 200-day simple moving average. Thank you. I really hope you found this helpful. I will be posting the other videos over the weekend to get a little bit more in-depth analysis for what's going on in different time frames and across different markets. So I hope you have a really nice weekend, and I will talk to you in the next video.